Hello investors and traders, and welcome to the weekly market report with Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you are a regular viewer of these reports, you'll know that I leave my lines on the chart from the previous forecast so that you can see how accurate the charts are. And as I zoom in here, I'll show you exactly how the price action played out for this week. Last week I drew this line, this diagonal line up in that way, just like that, where I said we would most likely move up to test this high from back here in mid-July. And the reason I felt that we would go higher was because on this candle, which is from last Friday, we saw an increase in volume, which signals the buyers are coming in. And then I said later in the week we would most likely pull back from that high. And if you see here, Thursday we closed right on the high. We tried to go a little bit higher, but we closed on the high. And then Friday, right here on the 12th, we pulled back from the high with a lower high, lower low. So we're starting to get this effect of what we call a pullback. So let me draw the new lines. I'll first erase these right here. I'll erase that line. I'll erase this line. And my forecast is going to be pretty similar. I think we're going to continue to hold that area of resistance. And I think that the market is going to pull back next week. I don't think we're going to start off strong. Of course, I could be wrong, but our percentage of accuracy here at the Market Guys is extremely high, and I think the technicals are showing possible pullback. Now, if we go to the Russell 2000, which is a more broad-based index, again, my lines are on the chart. I said that we would most likely move higher and then pull back to this former resistance, which is now acting as support. And lo and behold, what happened? There's the end of my line. You can't get much closer than that, folks. We did move up on Monday. We pulled back later in the week. And what I think for the Russell 2000, I'm going to erase all lines right now for the Russell 2000. I believe that we're going to pull back just like the Dow. So I'm going to remove all lines right here, and I'm going to draw a horizontal line just like that. Why do I think we're going to pull back? Because this candle right here is very close to what's called a bearish engulfing pattern. This very small candle here is called a spinning top, and that is usually what we see as a sign of indecision when we start reaching areas of resistance. So I'm going to leave that new high right there as resistance, but I think we're going to pull back from there. If I go to the spiders, let's ticker symbol SPY, you'll see once again, left my lines in place. Again, 100% accurate from last week's forecast. Said we would go up and reach that level. This is where I said we would pull back. Thursday, again, right to the penny, right there. Came within pennies of that high that I drew. It's exactly what happened. We moved up, and then we started to pull back. Now, I'm going to simply move this line over. I think we're going to continue that pullback, and the reason I'm stopping the line right here is because I think this gap fill point will be reached. So there's my target line. I'll leave that on from this week so that next week we can go ahead and see how accurate the forecasts are. Now, if I were to tell you exactly how I forecast the market, you would probably think I was crazy, because I basically analyze the market the way I would weather patterns. Again, that sounds crazy, but I actually do have expertise in studying weather. My degree is actually in aerospace, and as a pilot, weather is a big part of the curriculum. And when I look at weather, or a weather map, and I'll show you right here, here's an exact example. Right here is Shell Beach, and you might see there's some rain coming in. And for those boaters out there who are on the water, you might not think that's much of a threat. And so you see some clouds, you see some clearing, and all is good. But as I take a step back, and watch this, I'm going to step back with this map, you'll see that as I get more data, as I go further and further back up into space here through the satellite imagery, you'll see that there's many more clouds on the way. And if I back up a little bit more, this could look a lot more serious, because what I see here is a weather cell that's actually got some rotation to it. Now, New Orleans is very experienced when it comes to managing hurricanes, but this counterclockwise circulation is actually a threat, and that can, if it should go back into the Gulf of Mexico, it can intensify. Now, I live in Florida, so that's a big deal for me. If I'm seeing weather on the Gulf of Mexico, I'm going to start preparing for that weather to avoid getting hit and damaged in any way. And I'm going to prepare for that. And if I take another step back, you're going to see that this is very, very noticeable within the Gulf of Mexico. And I don't know what the newscasters are reporting these days, but if I were on any of the major stations, I'd certainly be talking about that. Now let's take a look at the charts and do the same exact thing. Here is the spiders, and I might say, okay, that looks like we might have a little bit of a pullback. But if I take a step back and look at a 3-year weekly chart, I have more data. A lot more data, and you can see that here on the weekly chart since February of 2016 the markets have had a strong rally. But look at this, the volume is dropping quite dramatically, and that drop in volume tells us that we're prone for a pullback. We're primed. This market is primed for a correction. If I take another step back, look at a 20-year chart, this is even more significant. We have had a very long stretch with virtually no major pullbacks, and as we look at the past, you can see there are patterns of regular pullbacks, so we're long overdue for that. If you look at the Dow, the diamonds on a 20-year chart, you can see here that yes, this too has been an upward trend, but the volume has been dropping quite dramatically. These are signals that I look for. This is what I teach. We look at the charts as a risk management tool, just like we would look at weather radar to gauge what the effect might be and how much risk we're putting ourselves in. We can avoid risk. There's definitely strategy that you could put in place that will minimize that risk if we were to get hit by a market downturn, and that's what we teach at the Market Guys. Have a great weekend. Stay in touch with the Market Guys and watch our progress. Follow along with our forecast so you too can see the evidence and how accurate technical analysis really is. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.